So not a lot happening in the way of news this week. We have leading indicators that showed that is a little bit, lower than what they anticipated, but didn't have a whole lot of impact on the market. The applications are coming out today as far as mortgages are concerned. Crude inventory is coming out today. It's supposed to have a little bit higher impact on it. Day after tomorrow, we're going to have initial claims. As far as jobless claims, we're going to have continuing claims. From before, we'd seen that the continuing claims were going higher, but the initial claims are going lower. We're going to have S&P Global Manufacturing. We're going to have existing home sales. That's going to be supposedly a mover, and that's also happening the same day as the claims. Then we're going to have new home sales on the 23rd. Those are going to be the things that are going to impact the market. Now, one thing I have noticed, and you've probably noticed as well, things that impact the market tend to retrace the market. We've seen things happening in a way that's not quite as anticipated. So a lot of the pontificators that people preach about interest rates, the guys you're talking to potentially saying, "Oh, the rates are going to go down, hold out on the lock." It's not what they're doing. They're actually going up. They're still going up. They're following the pattern that I've been showing in the price action pattern. To me, that's the one thing I can hang my hat on is a price action. It may not be accurate second by second, but it'll be more accurate over a longer haul, is what I'm seeing. Which we'll get into. We'll show that. Why do I look at that? Because that to me, I can see those patterns. I'm looking at the patterns of history on it, where if I'm trying to anticipate what the market's going to have, we also know that they've been lying to us about what the market is. There's a ton of bullshit that's being put out in the market to get people to feel a certain way about it, to get the consumer to feel a certain way, just so they believe, hey, things are going very, very well. We saw that all through the last 4 years, just complete error all over the place. And I wouldn't say it was error, it was cooked up crap is what it was. Now we end up having, I don't know if we're getting true data. I know there's some data coming out that's inaccurate, some data that is accurate. Some of the inaccuracies is to make things look worse than what it is on our current situation. We will see how the tariffs play out. We also have the information that from the podcast, if you listen to it, where I was talking with Richard Duncan, what he thought's going to happen with as a result of tariffs, but it's not quite happening that way. So we'll see. But his fears are founded. I get it. It makes sense when you look at the history of the world and what's been going on. I fully understand why he says what he says. But I'm of the take your medicine type list. If we don't fix it, who's gonna? So I think we should start working on a way to fix it, be aggressive in our fix, but also have ways to be able to pull back if we need to. Doesn't need to go full balls nuclear war. Well, hopefully it doesn't. Nobody needs that. But if it happened, none of us will remember it anyway, right? Not that I'm saying we should have it, just nobody forget about that kind of thing. So let's show you the price actions. You know what I'm talking about. And you should already know what I'm talking about. I show it all the time. We get into the mortgage-backed securities. Everybody likes to talk about the federal fund rate in the 10-year. I like to look at exactly what is moving the actual interest rate that you're borrowing. Now, this reflects the conforming loan rates. Now, if you look at MBS, Mortgage News Daily, we're over 7% for the average home owner. I'm going to pull that thing up so you guys can see that. You should look at that yourself. But right now, this is conforming loan rates moving downward in the bonds, therefore upward in the rate. That's what's happening here. And I've drawn this channel. This channel has been appearing itself in here since way back in March, I believe, is when I drew this out saying, we're in this downward channel. And we had news that swung us out of it, right? Because and then we had when the stock market did its thing and then swung right back out the opposite direction. So we had this mirror action, if you will. But where did it land? Back in the channel. But what is our barrier? We keep showing this barrier right here is the mortgage-backed securities price back pre the quantitative easing of 2009 announcement right here. This shows the value of the security at the time of announcement in November of 2008. And at the end of that announcement day, the amount of trading that happened. This was something that we were really paying attention to. It really caught my eye when it had this day, where it fired right up and turned right back around. Like, what happened there? I've been watching this bottom line like crazy. That was our barrier. That was what I've been looking at forever. So let me show you here. I've been looking at that for a long time, a couple of years now, because that's what was showing me was our barrier. That was and I predicted if we're going to hit here and pull off it, and it did. Then it got here, and dang it, it broke through. I'm like, what happened there? And that's when I went back and I looked at that date that they announced quantitative easing, and I marked the end of the trading day, and look what ended up happening. That shows this is the value that is our peak value right in here. And then we tried that value again. It pulled right back out. Now that is our barrier, and it shows again as our barrier. We followed this channel down. Got out of it, followed another channel down. When we pulled out of it, we were able to hit the barrier, come down, Opened up high, pulled right back out below the barrier. We're right into the channel, swung mirror image back into the channel. So we're following this channel down. Here is my anticipation with it. If I drew this channel out further and took it further out, I think we're going to ride this down. We're going to continue to see it decline rates. And as a result of that, rates going up, the MBS decline, sorry, MBS going down, rates going up. So rates will continue to go up until we hit here. When we hit this, this is where there's going to be a squeeze. That's when the news, in my opinion, will be our most valuable. What's the news have to say at that point? Now, I could be wrong there. It could be up here. It could be this point here. It's possible that that's that barrier. One of these two. So I'm going to just put two lines here. One of these two are going to be our levels that are going to squeeze this. So that's what I'm anticipating. One of these lines is going to squeeze into and force it either up and out or back down. If we get back down, now we're going to keep riding it down. That's what I'm guessing. I'm only going off price action. We'll see how that ends up going, but that's my anticipation. Let's see what we got for mortgage rate in the 6 point in the mortgage news daily. Take a look at this. Here we are, 6.99% in the 30-year fixed for people buying houses to live in. All we have to do is see a little bit more decline today in the MBSs, and we're going to be hitting that 7%. So if somebody tells you, hey, I got a 7% or 6 point whatever percent for investment properties, got a question. What's the catch? There's something going on there. So if you have questions, reach out to us. If you haven't got your LLC thing figured out, if you haven't decided what you're going to do with the family trust, if you haven't decided how you're going to build your wealth to hand off to the next generation, we need to talk. I know you can shop around, talk to the online companies, see what they're going to give you for a little bit better rate. But guys, we may be a little bit different than those guys. So we may be 3/8 to 0.5% off on the cost between us and those other cut rate deals, but they don't have this set up for you. Is it worth to spend a little bit to make sure you have built your empire and you can hand off safely to your next generation? It might be. And if it's not, shop around. Who cares? Do what you feel is best for you. I'm just here to facilitate the best I can and hire and pay the best people possible to help you achieve what you need to. Appreciate you guys. We'll talk to you on Friday.